The media wants you to believe that everything is okay. So they show you a type of information that you're going to be okay with that will pacify you. But we need to know the truth. You came here for the truth, so let me unveil that for you. In today's video, we are going to look at a few things and what is happening as a result. You see, you have inflation that's been going on, but what is the answer? What's the response? Well, I'm going to show you what central banks around the world have been doing more now than ever before. Let's dig in. We're going to see the Buffett indicator. If you've never heard of this before, just think of this like the whole stock market divided by the GDP, and that would give us a sense of where we are, not just in the a number. Okay, well, the stock market is at 10,000. Great. Well, in relation to the GDP, we can get a sense of where we're at. This tells us that we are near historic highs. The insanity of 2020 was beyond it, but we are still in this region we've basically never been. And that is a worrying sign, as always. Now, we don't have to say, well, it's not 1960s anymore. It's not the... That's fine, but we have to understand where the extremes lie, and they want it to go much, much further. You can see that one guy posting a meme online could send billions of dollars into a stock and create this chaos, essentially, a pump and dump, perhaps. Well, what is it about Warren Buffett that's very different about a lot of others out there is that he's sitting on $200 billion of cash. $200 billion in cash just waiting to be deployed, saying what he has said many times before, and that is, we're looking, but we can't find anything that's really, really good. Now, he did mention at his most recent conference that he was looking at a Canadian investment, but the point is he's sitting on $200 billion of cash. Even if he goes and drops, 5 billion, 10 billion, that's like a massive investment for most. But compared to what he's sitting on, not too much, because he's waiting for there to be blood in the streets. Most people don't have that patience. In the meantime, he's earning a few percent because it's not cash, it's cash equivalents. So he'll hold short-dated treasuries, for instance, and then you can make the money off of that. And $200 billion of that is nice income for Berkshire Hathaway, but he would rather be invested in a company. Just can't find the best place to put it. And I wanted to show you something because we use these blanket terms of, the stock market is at this or the economy is at this. Well, let's look at the stock market. You could see growth of $1,000 by equity market from 2019 up until now. And you'll see the big, big difference. All right. So in the example of the S&P 500, that $1,000 would be $1,700 today. And then you compare that to the Hang Seng, which is, at 600. So it depends on where you are, where you're at, but that doesn't mean future growth, right? Just because, well, over the last little while, this has been the best performing one, therefore it's going to perform better. We have to understand that always. It's where you are buying in. Remember, when you are buying into gold, when you are buying into crypto, when you're buying into the stock market, real estate, or whatever, you got to understand the history, yes. And there's always those patterns. You could say, look, there's never been a pattern before of a 10-year period being down and this such asset, so on and so forth. That's great, but what is the future prospects? And how did you come to that conclusion? How could you come to the conclusion of future prospects? Well, I looked at this or this and that. You have to understand it. Okay? Very, very important stuff. How did you come to that conclusion? And when we look at what the central banks are doing, it's worth noting. Let's say that world's oldest central bank keeps sounding the alarm on the fragility of a cashless economy. And what they say here is talking about Sweden and what they have done. And basically everybody is just tap, tap, tap. And that's great, but it does put the whole system at risk. That's kind of the worry here. What I think about Sweden is that they have gone all the way out. Basically, there's, I think, 8% is actually cash. So they just keep depleting that. The issue here is not the people. You might say, I'm not going to give up my cash. The stores aren't going to accept it because the stores, because of crime issues, because of the difficulty in that, processing fees, hopefully will get cheaper and cheaper. So these things will basically make that cash unable to be used. Like, oh, it's legal tender. You could still have it. You could bring it to the bank. You could deposit it. You could take it out of the bank, sure. But nowhere can you actually use that. And more transactions are going online as well. So you see what's happening. We are going into a cashless society. Yeah, there probably will still be cash 20 years from now. But where can you use it? That's what I'm saying. Now you could do an exchange between two people. That's fine. I think that will be around for a while. But ultimately, the way it's going, we're going into a cashless society. All these transactions are tracked. You know the way this works. But when we talk about the next level here, what is sort of the antidote? Well, many people see gold as the complete opposite end of all of this stuff. And you can see China is buying gold like there's no tomorrow. Bank of Korea buys gold as dollar and euro lose clout. Inside the 21st century gold rush, people are buying gold like they never have before. Okay? And by the way, I remember going to in the lineup when it was racing higher. I think that was 2011, 2012, being in the lineup and suddenly thinking to myself, uh-oh, everybody's catching on to gold because there's a lineup to buy gold. That was weird to me. Okay, I was like, uh-oh, people are catching on. This is a bad sign. And of course, when most people get in, it's usually a good sign that bull markets are over. So we'll see what happens though, because that's the physical, not the paper. So understand the difference there. Central banks turned into net gold buyers after the global financial crisis, and their purchases have tripled since mid-2022. Okay, so it hasn't slowed down at all. When we talk about what the central banks are doing. Now, are we talking about the Federal Reserve? Are we talking about the Bank of Canada? No, not at all. Not at all. But a lot of others, and I can show you that. You can see this first. Central bank gold demand tripled since mid-2022, and that's the dark area towards the bottom there, okay? So you can see the difference over, just over a decade period on what has happened in that. Looking at most central bank gold buying is now unreported. This is Goldman Sachs, by the way. Most of their buying is unreported. 6 emerging market central banks drive all of the reported net monetary gold purchases since 2022. All right. And so who do you have on here? You got China, you got Poland, Turkey, Singapore, India, Qatar, Russia, and others. What this means to me, first of all, I don't know, they're saying it's unreported. Well, how are you getting that data exactly? Is it kind of like a wink, wink, nudge, nudge type of deal? But either way, we've been told, China has more than what they say they do. This is all speculation. The point is, it is in demand. It's in demand. All right. And you could see this as well. Why? Number one reason, inflation hedge. And then we have performance during times of crisis, no default risk, portfolio diversifier, highly liquid asset, and geopolitical diversifier. And that's important, right? Because there is a big concern. There's a lot of concern for these countries which can't do business in US dollar, don't want to do as much business in US dollar. They want the diversity. They can hold on to gold. That's what they're doing. Now, there could come a time when they sell a bit of that. There's no question about it. But right now, they're just saying, I'm not going to go in and buy so much gold. That's what China's been doing. China has been, since 2013, on average, if you look at the chart, on average, selling. They had 1.3 approximately, I think this was December 2013 to January 2014. They had like $1.3 trillion worth of US debt. And now it's like half of that. So they've been slowly but surely, but in that meantime, they've been buying gold. And so you see, what's going on here. So there's a lot happening. The global monetary system is shifting. It's not going to happen overnight. It's not going to even happen next year, but we do see the change. You got to be prepared for that, and you got to make the right choices. Okay, this is very important. If all your eggs are in one basket, it is a very big issue. So that's this video today. If you want to know more about all of this in depth, I cover it for over 2 hours every Friday, the Finance Friday Live. I want to give a shout out to Finance Friday Live people. I'll see you then. Take care.